Hi, this is Nash with Alpha Phi. Today I'm going to shed a little bit of insights into the MassMutual limited pay product portfolio. This portfolio of limited pay products down here on the bottom of the Whole Life product guide is known for their limited paying period. So normally the number indicated in the product name, such as 10 pay, 12 pay, 15 pay, indicates the amount of time that a client may pay premium dollars into the policy before it is considered paid up. Paid up meaning the death benefit is paid up and you don't have to contribute and cannot contribute any more premium dollars into the policy. These limited pay products can be very interesting in terms of high cash value accumulation, but the major drawback is that you can't contribute that much money into them if you look at the longer time horizon and beyond their paying period. So let's dive in and take a look at the limited pays from MassMutual. So we have here some of the guaranteed cash values to start with. Most of the limited pay products have a lower guaranteed rate than compared to some of the other products that we saw on the previous slide. So the Whole Life 10 pay for MassMutual has a low guaranteed rate of 2%. You're also going to see that it has the lowest amount of death benefit available because of this lower guaranteed rate, and it has the most limited paying period out of the limited pay product series. The Whole Life 12 pay bumps up to 3% guaranteed. The 15 pay is in the middle there at 2.5, and then the 20 pay is 3% with a little caveat here until age 100 and 0% thereafter if we're living past age 100, which at least in today's age not a lot of people do. So these are the guaranteed cash value interest rates, and so you can kind of think of this again as the lower the rate, lower the guaranteed rate, the lower the death benefit as well as the guaranteed values, but the higher the potential non-guaranteed values or the dividend values are. So we'll see that the Whole Life 10 pay actually has some of the highest cash value net IRRs out of the entire series. But with some of these products, there are things to be aware of, which we've gone over in other videos. Check out the MassMutual 10 pay video I've released. I'll link it to the end here. Alright, and then MassMutual loan information, and this is not limited to the limited pay product series. It actually pertains to all the Whole Life products. But there are two loan options with MassMutual. You can have an adjustable loan interest rate. This is for policy loans to reinvest against your cash value into other cash flowing assets and grow your wealth in two places at once. If you choose the adjustable loan interest rate, the policy will have non-direct recognition, meaning they do not recognize when you take a policy loan and adjust your dividend rate. Where in the fixed rate option, option number 2, there's a fixed 6% loan interest rate, and this will, if you take a policy loan, have direct recognition treatment, meaning that if you take a policy loan, they will directly recognize that you took that and potentially apply a different dividend crediting rate to loaned values as opposed to non-loaned values. So in this instance, the direct recognition would match it with the loan interest rate at 6%. Just so happens to be that today the MassMutual 2023 dividend is 6%, so there wouldn't be any real difference there. But if the dividend in future years were to go up or down, this could actually benefit or potentially hurt the values on the policy loaned values. So if the dividend were to go up, say to 7%, on the direct recognition, you would have that policy loan values directly recognize that you've taken it, and it would decrease your dividend on those values only the values that you've accessed to match that 6% rate. If the dividend were to go down over time to 5%, this would actually benefit you because they don't want to feel like you're penalized for taking that loan at 6% simple fixed interest, so they would actually raise your dividend up to that 6%. So it could benefit you, it could harm you, depending on how you look at it, if you were to go with a fixed percent. There are some additional insights that I wanted to share. The adjustable loan interest rate is automatic if no election is made or determination at the beginning of setting up a policy. The loan provision can't be changed after issue. Some other companies do allow for a switch on certain policy years, such as Guardian, for example. In the 10th policy year, they will allow you actually to switch over from one option to another, a one-time opportunity. And then thirdly, if the life insurance supplement rider, LISR, is attached, this is a PUA rider that we attach to most of our policies where it makes sense, meaning the 10-pay and 12-pay with MassMutual. LISR doesn't make much sense there, just to get the best and highest cash values that we possibly can. But on all other MassMutual design products, we attach and design in LISR there. And so it is going to be the adjustable loan rate is available when LISR is attached. The adjustable loan rate is based on the monthly average of the Moody's Corporate Bond AAA index, or the policy loan's guaranteed interest rate plus 1%, whichever is higher. So if the corporate bond index is trailing up, and then it would be plus 1. Where if it was down at, like, say, 0, you would have the guaranteed interest rate plus 1. And then lastly, I did want to show this quick overview of kind of where the limited pay products stand in terms of high accumulation, in terms of cash value, balanced performance, and then protection, which is essentially their death benefit centric products. Definitely the limited pays are known for high cash value accumulation, and the 20 pay is kind of more hidden in the middle, as well as the Whole Life 65, which is a limited pay product where you can pay in until you're age 65. And then over here on the protection side, the high early cash value, the Whole Life 85, and the Whole Life 100, more of death benefit centric products. However, I will say the high early cash value are kind of unique in that it does provide, as the product name indicates, very high early cash values in early years, where some investors do like to have such high liquidity access, and they opt into that type of a product when selecting what is best for them. But it's always helpful to understand goals, what people are after when setting up a policy, making sure it's designed and tailored directly for them. So information is very helpful. That's it for now. Please hit the like button, subscribe if you haven't, so you don't miss any of my future videos. Take care for now. Thank you. If you enjoyed this video, please like and subscribe. Also, you can learn more at alphacrusaders.com at the link at the end of this video.